Hey everyone, Lance Ippolito with the Future of Wealth. Today I want to go over the power of options and one trade in Kraft Heinz. That's right, mac and cheese that changed my life and many of my clients' lives and their family lives forever. So why options? Well, you have limited risk. The max loss, the max risk on the trade is the initial premium you pay. So let's say you buy a call option and that call option is $1. You buy 10 contracts. That's $1,000 of risk, $1,000 of premium. That's your max loss on the trade. Let's say tomorrow that stock goes to zero, you can only lose that $1,000 that you put in. But your reward, well, really, it's unlimited. You maximize your rewards when you trade options. Technically, you buy a put option thinking the stock goes lower, the stock can only go to zero. But if you buy a call option, the stock can keep going up to infinity out there. So you have maximized reward, limited risk. Also, less margin is required. The only margin that's getting tied up in your account when you trade options is the initial premium you pay. So again, let's say you buy 10 call options at $1, that's $1,000 of margin tied up. That's it. Compared to stock, where you're having to buy usually thousands of shares and spending hundreds of thousands of dollars on margins just to try to get the same return. So again, if you have a smaller account, options are really a huge advantage for those smaller accounts, and that's how professional traders grow their accounts. They put limited risk on, they try to get the maximized return on the trade, and then they're not tying up their account balance so they can have multiple positions on at once. So those are 4 things that options give the trader the advantage. Now I want to go over Kraft Heinz. The Kraft Heinz merger was something that really changed my life and again, many of my clients' lives forever. Now, Kraft Heinz had a buyout. And what traders were doing ahead of the buyout during the merger, they were buying call options. So they were betting that the stock Kraft would go higher. So they were betting that the stock would rally. Well, they did a couple of trades in Kraft Heinz. First, they bought March call options at 35 cents. And this trade, it did not work. They lost their initial premium. The trade that they paid 35 cents for March call options went to zero. It was a loser. But they also bought June call options. So they went out in time. Now that trade was a huge home run. The stock went in Kraft Heinz from $62.50 to $87.50 on the merger news. That's a 40% rally in Kraft Heinz. The call options that these large professional traders were buying, they were buying 10,000 call options, 10,000. So they were paying 70 cents. So you buy 10,000 call options at 70 cents, that's $700,000 of premium. So that's the max risk, the max loss on the trade. Well, after the merger, those calls traded at $15.60. Now remember, each one contract is 100 shares of stock. So that $15.60, they did that 10,000 times in profits. They turned 700,000 into over $15 million, $15.5 million in a short amount of time. So that's a gain of over 2,100%. Now again, you bought stock, you made 40%. That's fantastic. You bought call options, that's over a 2,000% gain. That's life-changing out there. And I know from my account, I had 10 call options. I had 10. So I only had about $700 of risk, but obviously a fantastic gain. But I had clients out there literally that retired the next day. One guy actually bought an island in the Caribbean shortly after. He was so excited out there. Now, one thing I do want to spend some time on is buying time, because you're not always going to be right. In fact, the trader who made that $700,000 bet, who turned it into $15 million plus, was wrong at first. Remember I told you those March call options, those were front month, so those expired soon. They expired worthless. They bought 10,000 of those call options at 35 cents, and it was a loser. They lost their initial premium of about $350,000. That's a big loser, right? The beauty of trading options is this though, you can be wrong. And trust me, I've been wrong tons of times out there. But you can buy more time if you're still confident in the position. And when you buy more time, you're giving the position a longer time period to work in your advantage out there. So yes, even professionals are wrong at some point, but with the proper mindset, and if you have that confidence on the position, go out, give yourself some time. You'll save some gray hair. You won't be as stressed out worrying about, oh no, expiration's about to approach. And if you have that attitude, just like that trader did, who turned that $700,000 into over $15 million, that proper attitude, that never give up attitude, you will succeed as well trading options.